Hi there, I'm Lars from Reyker, and a team of us went to the Alternative Investments Conference yesterday, and I thought I'd take this time just to give you a little bit of an overview of the alternative investments market. Okay, what is an alternative investment? Well, an alternative investment is a type of investment that falls out with the traditional investments. Traditional investments are essentially defined as having a long position in stocks, bonds and cash. When we talk about a long position, we're talking about buying the asset itself. A few examples of alternative investments that you might have heard of before are commodities. This could include grains, metals, crude oil, etc. Real estate. This could be direct or indirect. You could buy the property itself, or you could buy into a fund who are buying a number of properties. Types of funds. This could be hedge funds, private equity funds, enterprise investment scheme where they hold a number of different equity investments into a fund. And then there's the other type of investments. This is categorized as either intangible or tangible assets. Tangible assets would be the likes of fine wine, art, maybe diamonds, etc. And intangible assets are essentially like patents. Typical characteristics of the alternative investments. Well, the term alternative investments is a bit of a loose term because these types of investments cover such a broad asset base. There is, however, some similarities between the different types of investments that help with identifying them from the more traditional investments. The characteristics that we associate with alternative investments are illiquidity of the underlying investment. This is one of the major characteristics that we look for, as it can significantly affect the buying and, well, more importantly, the selling of the investment. You may find that your money will be tied up for a long period of time with little or no access until a set date in the future. Then there is narrow manager specialization. This essentially refers to only having a few number of specialists in the industry. There is low correlation with traditional investments. So this characteristic is very important, as it is one of the major advantages of holding an alternative investment in your portfolio. It essentially means that this type of investment might not move in line with other investments that you might hold. For example, if you're currently holding shares and they dramatically drop in value, but the value of some properties that you also own increased slightly or stayed the same, we would say that there is a low correlation between these assets. There is the low level of regulation and less transparency in the alternative investment market. This means that you might not be protected by such FCA protections, for example the FSCS protection. It is important to note that when investing in an alternative investment, you need to carry out your own full in-depth due diligence on what you're actually getting into. And then there's limited historical data. This makes it difficult to analyse past performance and predict what might actually happen in the future. And finally, unique legal and tax considerations. For example, if you invest in an EIS portfolio, you qualify for up to 30% income tax relief and you don't have to pay any tax on any capital gains. Unlike traditional investments, alternative investments might not be for everyone because of a number of different characteristics that I've just mentioned. These types of investments are more suited to high net worth and sophisticated investors who are looking to add diversification to their portfolio. For more information, you can visit our website, Reyker.com.